Hello, ladies and gentlemen. It's 5 p.m. now, Japan time. So we'd like to officially start today's seminar. Welcome to the fourth FinCity.Tokyo Global Networking event for 2021. My name's Lance Trong and I'll be your facilitator for today's event. This fourth webinar will focus on asset management. So we'll have major Japanese asset owners, gatekeepers, etc., present recent changes in Japanese asset owners, as well as opportunities for foreign asset managers. This will be followed by a series of pitches by pre-selected foreign asset managers to an audience of Japanese asset management professionals. In terms of housekeeping, as I mentioned earlier, please make sure that your microphone is muted during the event. And please note that Q&A will be held during the networking session from 6 p.m, where you can ask your questions directly to our speakers, as well as exchange contact info. So to repeat, given today's tight schedule, we won't be having Q&A at the end of each session, but at the end of today's event. Please note that after the event, we also ask that you take a few minutes to fill out a survey. This survey will automatically pop up when you exit the webinar. And by filling out the survey, you will also receive a link to download today's material. So we ask that you do that, including the contacts for today's speakers. Up on this slide is the monthly newsletter publishing schedule for FinCity.Tokyo. This will also be included in the information pack, but you can also access more information via the QR code on the upper right-hand corner. We'll now move to our pitch session, where, as mentioned earlier, we'll have pitches by our 5 pre-selected foreign asset managers. These will be 5-minute pitches, and I will let our speakers know when their time is up. And please note that because time is limited for these speeches, presentations, may only cover the overview for these companies. So if you're interested in learning further details, please do stay behind at the end for our Q&A networking session. So without further ado, let me first hand over to Jay Bala from AIP Asset Management. Thank you, Jay.
Oh, thank you for that. Let me just share my screen. Let me know if it's up. All right, can everybody see that?
Not yet. Okay, yes.
Okay, perfect. Well, good afternoon, everyone, and thank you for taking the time to join us today. My name is Jay Bala. I am the co-founder of AIP Asset Management and the senior portfolio manager for the AIP Convertible Private Debt Fund. Established in 2013, we're a Toronto-based team of about 10 people with about 100 years of combined experience in direct lending, private debt, and equity capital markets. AIP is supported by a strong partner in Canada with over $6.5 billion in AUM, which is an exclusivity to distribute our fund in Canada. The fund, the AIP Convertible Private Debt Fund, has been top performing fund for the past 7 years, as recognized by numerous industry awards. We rank first in Canada and first in the United States in our respective categories. And if you run a search on Bloomberg, on all alternative investment funds, of which there are over 2,200, you'll notice on a 7-year basis that our fund would rank number 4 in North America in terms of returns and number 5 in the world. This basically just gives you a quick snapshot of the fund. Just overall, it is a private debt fund. The key difference is that we lend to publicly listed companies in North America, both Canada and the US, with a market cap of less than $200 million. And all of our loans are convertible into publicly listed stocks. Every deal must check 2 boxes. Checkbox number 1 is, when we look at it, is there enough assets or is there enough collateral to get our money back if things go wrong? And number 2, we look at it and say, if this transaction goes through, is this really a stock market story? Is there equity upside? Is this something we want to get behind? And then so when we talk about sort of the market opportunity, part of the reason our returns have been so strong has really been a shift in the way the market operates here in North America. So if you look at this movement from mutual funds, which are actively managed, to passively managed index funds and ETFs, this transition has resulted in a very large amount of capital chasing after a very few number of stocks. So if you look at the top 5 stocks on the NASDAQ 100 today, they represent over 45% of the entire index, whereas the bottom 5 would represent less than 40 basis points. And if you look at the bottom 5 of the NASDAQ 100, they're still multi-billion dollar companies, and they're seeing a reduction in capital inflows. So when you come all the way down to our target market, which is the sub 200 million market cap companies, their access to capital has declined much more significantly. And therein really lies the opportunity set for a fund like us, which is somewhat unique in this space. And we've managed to capture additional alpha by working with these companies to help them grow. On this snapshot, we kind of just give you an overall view. Our fund has a relatively low correlation to both fixed income assets, equity markets, and other private debt funds. And just as an example, we say the correlation with the Nikkei 225 is negative 0.1, and with the Nomura Bond Index is 0.2, so very low correlation. And because of that, if you add a 5% allocation to a high net worth investor's portfolio, and we use a 60-40 split, 60% equities, 40% fixed income, what you'll see is a significant increase in returns, a decline in both your volatility and your downside risk, as well as improvements in your beta and your Sortino ratio. And I'm just going to flip back to this one page and kind of just give you a quick snapshot of a transaction that we did. And I think that'll give you a better understanding of exactly where the opportunity set lies and why we're able to generate this kind of return in a consistent basis for the last 8 years. So in Q4 2018, we invested in a small cap lithium company called Desert Line that was listed here on the Toronto Stock Exchange. Desert Line, they mined a low-grade lithium called lepidolite, which is primarily used for ceramics. I think when most people think about lithium, they think about the high-grade stuff that goes into cell phone batteries, electric car batteries, and so forth. This company clearly didn't do that. They were producing this low-grade lithium called lepidolite. When the market was hot in the beginning of 2018, it had a market cap well in excess of 150 million bucks. They were raised over $30 million in the IPO, and they were producing lepidolite at $90 a ton and selling it for 130. By the time we got involved, the market dynamics had changed. Lithium prices had dropped. The market cap was under 15 million, and they were producing lepidolite at $90 a ton and selling it for 70. So when we got involved, we said, look, you're losing $20 for every ton you produce. So part of the transaction that we said was, look, it's going to be a 4 to 6 week process. But you clearly got something here, right? You raised $30 million, you built the mine, it's operational. So part of our due diligence, why it takes 4 to 6 weeks for any transaction to get done is, we do the underwriting, we do the due diligence, we do the legals, and then we do the monitoring. So for part of the due diligence process, we hired third party.
It's 5 minutes, Jay.
Oh, my apologies. Maybe I'll just leave it off with, I'll be around for the Q&A session. If you want to hear a bit more about it, you can let me know. And with that, maybe I'll just say thank you to everyone.
Thank you for that, Jay. Much appreciated.
No problem.
Next up, we have Jonathan Napora from Ellington Management Group. Thank you, Jonathan.
Great. Good afternoon. And I'd like to start by thanking EY and FinCity.Tokyo for affording Ellington the opportunity to present today. My name is Jonathan Napora. I'm the head of Asia Pacific Business Development and Investor Relations at Ellington. Prior to joining Ellington in 2016, I worked at Fortress Investment Group based in London, where I focused on business development across Europe, the Middle East, and Asia. And prior to that, I started my career at UBS as an asset allocation FX strategist in Chicago, London, and Hong Kong. Just given time constraints we have today, I thought I'd keep it relatively brief. And for those of you that don't know much about Ellington, perhaps just share a brief overview of our firm. Let me just pull up the presentation here. So Ellington, we were founded back in 1994 by a guy called Mike Vranos. Mike was instrumental in building the mortgage business at Kidder Peabody, which was a large US investment bank and one of the largest mortgage desks on Wall Street. Our co-founder, Larry Penn, who Mike attended Harvard with, was building the very similar business at Lehman Brothers. Then in 1994, Mike was approached by the Ziff brothers, who sold a large publishing company in the US, and were looking to take some of those proceeds and seed some hedge fund managers. So they made 5 seed investments at that time. Daniel Ock to form Ock Ziff, HBK, Starwood Capital, Chanos, and Ellington. So if we fast forward to today, Ellington now manages close to 13 billion in AUM across the credit and liquidity spectrum. We have approximately 150 employees across offices in New York City, where we're headquartered, Old Greenwich, Connecticut, and London. And we hope to expand our footprint in Asia Pacific through the FinCity and also the JFSA market entry initiatives. The business today is owned by 14 partners. 5 of the 6 original founding partners are still with the firm today. And I would say that whilst mortgages and structured credit are at the core of what we do at Ellington, we have diversified over time into other strategies, such as systematic corporate credit, as well as distressed. The strategies we offer through a variety of different commingled and bespoke solutions. And I think one of the important things to note is that despite being a 13 billion firm, one of the advantages I would say of partnering with Ellington is that we're really truly trying to understand the challenges that face various investors across regions and channels. We realize you can't have a one-size-fits-all product that works in every market. A product for a Hong Kong family office might not be the same product that works for a Japanese pension, which is different from a French insurance company, for example. So we really have to sit down, listen to what our investors need, leverage the expertise we have at the firm, and then develop these solutions that fit the needs and constraints of those clients. So for example, we actually developed a tailored Ginnie Mae mandate for Japanese banks. Obviously, understanding that Japanese banks, amongst other banks, obviously, are very sensitive to the capital treatment under Basel III for risk-weighted assets. Really creating a solution that leverage our expertise in agency mortgages to develop an RWA efficient strategy that was suitable for Japanese banks. I'd say in terms of our philosophy, complexities in the DNA of our firm. If you look at a lot of the senior members, both on the investment side and research side of our business, they come from very highly technical backgrounds and degrees from the top Ivy League institutions. Where we seek to add value as a firm is really trying through capturing complexity premium, right? So looking at these very complex or misunderstood securities and using kind of highly technical, robust models and analytics to analyze these securities and really try to capture alpha, through that process, as well as a focus on capital preservation with risk management and portfolio construction frameworks. And I'd say that, as a $13 billion firm, one area where we've been successful is investing in our infrastructure as well as data. So, we spend close to $8 million per year on alternative data sources. And where this is important is that it really enables us to, use extensive kind of mathematical and statistical analysis to analyze these securities using these alternative data sources and, kind of further enhancing, returns and investor outcomes that way. And just quickly, if we look at kind of the structure of the organization, I would say one thing to note is we have a lot of longevity across our senior portfolio managers. And if you look at this org chart, a lot of the senior PMs have spent their entire careers, at Ellington. As I mentioned before, 5 of the 6 original founding partners are still with us today. If you look, the gentleman that runs our mortgage prepayment business, Nikolai Stoichev, he was intern number 1 at Ellington. In fact, he was a student of John Giannakopoulos, our head of research.
That's 5 minutes,
professor of
Jonathan.
economics at Yale. Oh, sorry. Well, I'll keep it to that. And thank you very much. And very happy to speak with people offline or during Q&A.
Thank you for that, Jonathan. Much appreciated. Next up, we have Mark Cox from Mayar Capital. Thank you, Mark.
Okay. Share my screen. Hi, everybody, and thank you for allowing me the opportunity to talk about the Mayar Responsible Global Equity Fund, which is a UCITS vehicle. That term responsible reflects the ESG factor and component that's been at the heart of the Mayar process, to the extent that it was actually in the legal documentations, the ESG restrictions in that since its inception in 2011. Well, I think the ESG story is pretty well known, especially to this audience. I'm going to talk about another part of our value investors. Now, those of you that follow the equity market closely will know that value has had a pretty tough time of it performance-wise relative to growth over the last 10 years now, despite some false storms at the beginning of this year. And yet, despite that underperformance and the fact that we're value performance, you can see from the ratings that we have on the from Morningstar and for Lipper that we've done pretty well relative to the peer group and the broader index. And I want to go into a little bit of why that might be. So we've heard a lot recently about the death of value investing. Why might that be? Is it possible that the edge that value had never existed and the data that supported that was a result of data mining? Well, the academic evidence is pretty broad, it's deep, and we believe the empirical evidence is clear that historically value investing edge was real. So did that attract too many people into the trade? Did it become crowded? Well, if that were the case, we probably would expect value to be overvalued, if that's even possible. And we can also see that that proposition is not supported by fund flow data. So perhaps a more likely explanation lies in the fact that the economy has evolved over the last 10, 20 years, and that the value investor metrics and approach has not. Let's look into that in a little bit more detail. We can see this reflected in the largest companies in the S&P 500 30 years ago compared to today. And we can look at the types of companies and the types of investment that they have to make to keep their businesses and their competitive edges, like Exxon and Walmart. Lots of investment in factories and in plants and in shops and what have you, compared to today with lots of tech companies that don't have to invest in those kinds of assets. And that has some interesting implications, we think. If we go back further to 1977, we can see that investment in tangible assets, those factories and plants, etc., nearly doubled that of intangible assets. Now, if we fast forward to today, we'll see that relationship has flipped, and more so, with 2.25 times of investment in intangible capital expenditure versus tangible. The accounting rules have not been updated to reflect that. So we find that despite these investments, they're not being capitalized, but instead being expensed. What's the implication for that? Let's look at this simple example. Company A spends $100 on tangible assets. The net assets or book value doesn't change. The cash just moves into long-term assets, and the net income is lowered by $5 as the investment is capitalized over 20 years of depreciation. We switch that to company B that spends $100 on intangible assets. We see a completely different approach, as the net income is lowered by the amount that is expensed, in this case, $100. So the importance of intangible assets has grown dramatically. The accounting treatment of this has not kept up. So that has big impact on traditional value metrics like price earnings and price to book, which means we have a problem of definition. We can see that the value indices are not capturing the right amount of value, and value investors need to adapt. And we sometimes move that, when we look at accounting, we move those expensed investments into capitalized, and that gives us a very different view of markets. And so what are we looking for? We're looking for these great businesses that are able to generate high returns on capital, whether it's an intangible investment or not, that are housing great companies and are available for great value. We do this by taking an ethical owner approach that tries to ignore markets and concentrate instead on investing in businesses and in industries. Despite what we were told by our mothers as children, we're not special, and we are subject to the same biases. So we need to apply behavioral science to mitigate the impact of those behavioral biases. And we take a probabilistic approach, which helps us think in ranges rather than precise points in the future to make our decisions. We include ethical screening,
that's 5 minutes,
quantitative and qualitative assessment, and continuous monitoring. That's it.
Thank you. Thank you for that, Mark. Much appreciated. Next up, we have Tetsuya Nishimi from Rockhampton Management. This presentation will be in Japanese. Thank you, Tetsuya.
こんにちは。ロックハンプトンマネジメントの講師 IO を務めています、西見と申します。本日はお忙しい中、ご参加ありがとうございます。そして、FinCity 様、この貴重な機会をいただきありがとうございます。このプレゼンをですね、日本語で行いますが、日本語の後に、若干英語で要約を付け加えますので、ご了承、くださいませ。Hello, Tetsuya Nishimi from Rockhampton Management. Thanks for joining the call today, and thank you, FinCity, for giving us this opportunity. 弊社は18年間日本株ファンドを運用してきました。メインファンドのロックハンプトンファンドはファンダメンタル重視の低ベータ、日本株ロングショート戦略です。2010年末に一任免許を取得しております。東京、香港オフィスにおいて28名のチームで、セクタースペシャリストが12名おります。私たちは日本株のフォーカスファンドであります。We've been managing a Japan-focused fund for 18 years. The flagship fund, the Rockhampton Fund, is a Japan equity long-short, low beta, catalyst-driven fundamental strategy. And we have the full fund management license in Japan, which we obtained in 2010. We have a team of 28 professionals in our Tokyo and Hong Kong offices, including a team of 12 sector specialist analysts. We are a Japan-focused team. 2003年のファンド設立以来、様々な市場環境を経験しております。ライブドア、リーマンショック、東日本大震災、ユーロ危機、そして直近のコロナ禍相場。日本は2003年の小泉政権相場、2013年のアベノミクス相場と、10年周期で魅力的な相場が到来していますが、今回、弊社がウィンドウ・オブ・チェンジと呼んでいる2020年以降のこの相場はですね、過去の2回の魅力的な相場と比較してもですね、より幅広く息の長い相場になると考えております。We've seen a lot of challenging markets since our inception in 2003, including the Lagos shock, the GFC, the 2011 Great Japan earthquake, the Euro crisis, and of course the recent COVID period. But very occasionally, we've been involved in good markets as well, such as the Koizumi period back in 2003, right after our inception, as well as the Abenomics period from 2013. We think that the opportunity in the current environment, which we call the wind of change, will be broader and longer than the previous two good markets. アベノミクスの初期に20兆円強のですね、日本株を買ったのは外人投資家でした。そ その後、2015年以降ですね、4年間にかけて、ほぼ同じ金額を、外国人投資家は売却しました。その反対側ではですね、日銀が ETF の購入を30兆円強行いまして、いわゆるアクティブ売り、パッシブ買いという構図です。なかなかアルファがですね、構築しづらい逆風の環境が続いていました。ただ、2020年以降はですね、外国人投資家の売りも止まり、ETF 買いもほぼ2021年に入ると皆無になり、需給は改善方向にあります。So foreign investors, after purchasing about 20 trillion yen of Japanese equities in the initial Abenomics rally, sold all they bought in the last in the next 4 years, and have remained on the sidelines ever since. Meanwhile, the BOJ, which stepped up and bought 30 trillion yen of Japanese equities in their ETF purchase program, have been sidelined since 2021. So the supply-demand dynamics until 2020 was very negative for alpha generation and a headwind. Currently, that dynamic has improved. あと、ヘッジファンドも日本株へのグローバル投資をですね、だいぶ引き下げてきております。Hedge funds have also lost interest in Japan and have lowered their gross exposure as a percentage of their investments globally. 世界の投資家の傾向を見るとですね、おそらく日本への期待値は相当低く変化することは無理だろうという見方だと思いますが、しかし私たちはこの認識のギャップがチャンスだと見ています。政府や政治家の努力では叶わなかった変化が不幸か幸いかコロナ禍で進んでいます。企業はプライドを捨て、より積極的なリストラ、年功序列の廃止、日本企業同士の敵対的買収、M&A の促進、法改正なしでの労働市場の流動化、DX など、選挙、政治家、ワクチンなどが止められる流れではありません。So based on the apathy from foreign investors in Japan, the consensus is that Japan is not going to change. But we think Japan is changing, and we think that this opportunity comes across major restructuring, end of deference, hostile bids from corporates, corporate governance, and M&A, as well as labor mobility that does not depend on labor law changes, as well as digital transformation. COVID has changed Japan, and no election, no politician, nor vaccine can stop this change.
That's 5 minutes. Yeah.
わかります。そういたしましたらですね、残りの、部分は、後ほどのブレイクアウトセッションで、お話しさせていただきたいと思います。よろしくお願いします。Thank you very much, and I hope to see you in the breakout sessions.
Thank you very much for that, Tetsuya. Finally, we have Sergey Dyakov from Tikehau Investment. Thank you, Sergey.
Hi, everybody. So I've been asked by the FinCity.Tokyo today to speak in Japanese. So I apologize in advance for any mistakes that I may make. But それではご紹介いただきました Tikehau Capital の Tikehau Investment Management Japan の、カントリーヘッドのディアコフと申します。よろしくお願いします。まずですね、Tikehau Capital というのは会社の名前から言いますと、これはどこの会社とはよく言われるんですけれども、名前からいきますと、Tikehauというのは、もともとフランスの会社なんですけれども、Tikehauというのは、フランス領のタイ地から近くにあります太平洋の中に小さい島の名前でございます。フランス語で発音しますと、Tikehauになるんですけれども、日本語のウィキペディアを見ますと、Tikehauという発音がありますので、両方とも間違いないです。白川さん、次のスライドお願いします。で、Tikehau Capital という会社は、17年前ですね、フランスで設立された会社でございます。フランス人の創業者が2人がいまして、当時に運用会社ではなくて、自分のお金、自己資本を使って、ただいろんな場面で投資し始めました2人なんですけれども、その時から会社は成長して、2017年にですね、ユーロネクストで上場しました。それ、ヨーロッパのアルタナティブの運用会社としては非常に珍しいことですけれども、 その時からまた AUM も非常に成長しましたので、今のところはですね、318億ユーロの残高があります。そして上場しましてから、その上場から集まった自己資本の金額ですね、30億ユーロに近い金額でありますけれども、大体この金額は使い道はですね、自分で自分で運用を行っている戦略に投資します。最低の場合はですね、ファンドはそれぞれ違うんですけれども、最低の場合、ファンドの 5% から、一番大きいの場合はですね、私は見たことは、50% 以上自分の投資、自分の自己資本の投資して、運用を行っているということなんですけれども、そういう意味で、LP 投資家の皆さんと利害の一致は非常にいいと言われると思います。そして今のところは世界中672人を超えた数、社員がございます。大体12カ国に拠点がありますけれども、一番大きいのは大体フランスなんですけれども、そしてヨーロッパのいろんな国、たくさん拠点があります。そしてニューヨークとアジアですと、シンガポールと韓国と、2019年から東京の Tikehau Investment Management Japan という会社もあります。私と、日本人の同僚、コンプライアンスオフィサーのスタッフがいます。2019年ですね、第2種タイプ2の取引登録できましたので、その時からTikehauの戦略を日本投資家にご紹介します。そしてそうですね、次のページですね。これはいろんな幅広い場面で投資を行っているんですけれども、その中ですね、一番日本の投資家の LP 皆さんから注目されているですね、弊社のプライベートデット、いわゆる具体的に言いますと、ヨーロッパのダイレクトレンジングと新しい戦略はヨーロッパプライベートデットセカンダリーでございます。ダイレクトレンジングの弊社の特徴はですね、非常にトラックレコード、ヨーロッパの一番最初からその業界はそのダイレクトレンジングの概念ができてから投資が行ってますので、トラックレコードのこの中に今10年を超えた非常に長いトラックレコードでございます。そしてイギリス、皆さんはヨーロッパのプライベートデット、ヨーロッパのダイレクトレンジングと言いますと、やっぱりイギリスは一番大きいですので、イギリスのことを考える方が多いと思いますけれども、弊社の場合はですね、イギリスはなかなか触らないで、フランスの方が多くて、フランスと大陸、ヨーロッパの大陸、だからいろんな国に拠点がありますので、その現地のプライベートデットチームを使って案件発掘します。そして、プライベートデットセカンダリーズは今年できました戦略なんですけれども、今までも皆さんもプライベートエクイティのセカンダリーズは非常によくご存知と思いますけれども、ただ、プライベートデットセカンダリーズはもう世界中プライベートデットに投資しまして、LP 投資家が多いんですし、その中にもう途中で出たいいろんな理由でセカンダリーズで売りたい投資家、LP 投資家がいますし、そして GP の皆さんもGP の方からいわゆる GP レッドセカンダリーズのオプチュニティが非常に多いです。そういう意味でこの戦略があります。もう一つですね、アメリカで行っている。Okay, thank you. Well, I'll be answering questions after this, so please let me know. Thank you.
Thank you, Sergey, and thank you to all of our speakers, particularly in terms of managing our 5-minute time limit. It's much appreciated. So without further ado, we'd like to now move to our Q&A networking session. I'm sure you're all very familiar in terms of how to join breakout rooms in Zoom, but you can see the instructions up on the screen there. Please note that we have got our main room here, as well as 3 breakout rooms, rooms A, B, and C. And you can see on the screen who will be in each room. Please note that in the main room, we will also have officials from the Financial Services Agency as well, who have kindly joined us today. So if you have any questions, regarding licenses or market entry, please make sure to come to that room. Just finally, you will have seen in room C, we have the Business Development Center Tokyo, BDCT. This is an organization established by the Tokyo Metropolitan Government who provides support for foreign companies looking to establish operations in Tokyo. There's obviously also English support available as written on the screen there. So please feel free to ask them any questions that you may have regarding, your planned or potential market entry into Tokyo. So without further ado, please feel free now to join any of the rooms that are of interest to you, and we look forward to seeing you there.